Welcome back to Bazaar Morning Call. Well, for now, the market is not looking good at all. 1% lower on the index. But this is our segment Quarter Se Quarter Tak, where we get you expectations from each sector. Today, Sonal is with us to tell us how Q4 will be for the oil and gas sector. Over to you, Sonal.
Thank you so much for that. It's expected to be largely a good quarter for oil and gas space. But let's start with the basics. The Singapore gross refining margins, the GRM, surged to $7.3 per barrel in Q4 from $5.5 per barrel in the previous quarter. Brent crude prices remain relatively stable at $83 per barrel on a quarter-on-quarter basis. Now let's talk about Reliance. It is expected to report a consolidated EBITDA growth of around 4% on a quarter-on-quarter basis and 10% on a YOY basis. The O2C segment is expected to see 11% increase in EBITDA, while retail and Jio will see low single digits on a quarter-on-quarter basis. Upstream companies like ONGC and Oil India are expected to see modest EBITDA growth of around 3 to 5% on a QOQ basis. This is primarily due to lower operational expenses, while volumes and realizations, they are anticipated to remain stable. Despite a mid-March cut in fuel prices, oil marketing companies are expected to experience a rise in marketing margins. The improvement in gross refining margins is expected to see a growth as well, and that is something that will be good for refining segment. Let's talk about the profit estimates. HPCL expected to see a big growth of around 200%, which is expected by Nuvama, and the others will see a mid-digit growth. Now, city gas distribution companies like IGL, MGL and Gujarat Gas are expected to witness volume growth of around 2 to 3% in the quarter. However, fluctuations in EBITDA per SCM are likely due to price adjustments. So, IGL and MGL will see a decline due to price cuts. But Gujarat Gas is expected to do well in terms of EBITDA growth. Now about gas utilities, GAIL will see 6% increase in EBITDA due to decline in Henry Hub prices. Petronet LNG will see EBITDA to be up 4% on a quarter-on-quarter basis because of better Dahej utilization and tariffs. While for GSPL, it is expected to be flat in terms of EBITDA growth. So this is what is expected from the entire sector this quarter.
Thanks a lot for that. Well, Probal Sen is also joining in, Senior Research Analyst, Oil and Gas at ICICI Securities. Probal, you heard Sonal out. What would your big takeaway be from this quarter? What are the expectations this time around?
Well, I think broadly Sonal covered it. It looks like a pretty strong quarter for across the coverage universe. There's refining margins have gone up. Integrated petrochemical spreads have also shown a little bit of an improvement. Spot LNG prices have been a little bit under control. So to that extent, EBITDA margins, particularly for the CGD companies, have also improved. And for GAIL, the growth in transmission and trading margins, as well as some improvement that we expect to happen on the LPG and petrochemical margins front, means that even their numbers are going to be fairly solid. So from a overall perspective, I think the numbers actually obviously look fairly strong. I think Reliance also is going to likely to see a fairly strong recovery in its oil to chemical segment, which is likely to drive the QOQ improvement that we are looking at on both EBITDA and net profits front. So pretty strong quarter overall. Obviously, the macro has changed quite a bit, since then. So, depending on how the macro plays out, I think the reaction to these numbers will be determined. But from a quarter perspective, I think a fairly strong quarter in prospect across the board.
All right. Hi, Probal. Good morning and good to see you. And, we have this news piece that we are addressing this morning and over the weekend as well with regard to the skirmish between Iran as well as Israel. Now, Iran has a fair bit of contribution both to the oil as well as the gas space. So could you quantify that number? What is their contribution?
Iran, I think, produces about 3 million barrels a day of oil, which is basically 3% of the overall oil supplies globally. And their gas production is actually the third largest in the world at about 700 odd MMSCMD. But interestingly, their exports actually are less than 3% of the global trade at, I think, somewhere around 50 MMSCMD, or about 13 to 14 million tons only out of the 400 million tons of LNG that's traded. So there's a lot of domestic consumption, but obviously in terms of the overall demand supply balance for both oil and gas, Iran is an extremely important component. So any disruption that happens to that supply, and I'm not saying it will, but any disruption, if it happens as a result of escalation of this conflict, will have a material impact on the global oil, and gas demand supply scenario as well as prices.
Okay. All right, Probal, just to follow up on that question then, the OMCs have done very, very well, and there was that fear that maybe there'll be price cuts that'll come about getting into election. Some of those fears didn't really come through. Now the problem is that the Brent crude prices are spiking up, and since we're getting to election, if you have to get a price increase, it will only happen post that. That's close to 3 months or so away.
Sure.
What's your view? I mean, could those stocks be under pressure? Will there be a risk to their earnings as well? How do you play them?
First of all, let me qualify saying that I'll only comment on HPCL. You'll have to forgive me that PPCL and IOCL are on our restricted list, so we can't really comment on our ratings or view on those two names. Having said that, HPCL, if you really look at it, obviously the marketing margins for the next couple of months will remain under pressure. There is no doubt that if marketing margins actually decline below the 3 rupees normalized margins that we're looking at for the full year, that has a fairly significant impact on the earnings and profitability. Having said that, the election results are likely to come in the first week of June. And, we would not like to speculate on when and to what extent the price increases to sort of align with the change in the crude and product prices will start to be allowed again. Our core contention is that, what we have seen in the past as well, that the government has been fairly proactive in terms of allowing the companies to recover their losses, or, even if it is with a lag. So at this point of time, we would like to say that, yes, there's probably 2 months of weakness that one is looking at, and therefore a slightly weaker first quarter. And to that extent, the FY25 earnings may see marginal downgrades. But from an overall year perspective, we would still like to believe that, as and when price changes are actually started to be allowed as normal business, they can probably pass on the hit that will happen maybe with a $90 crude environment. So, that's what our core contention is as of now. Obviously, it's changing every week. So, it's fairly fluid in terms of how to look at it.
Okay. You want to just wrap up for us? What are the top picks in the sector? What is a void for you now? If you can just take us through your list.
Sure. We continue to be positive on GAIL, on MGL, on ONGC, Oil India, as well as HPCL in the space. We are a little bit cautious on Petronet LNG, specifically after the strength that the stock has seen right now, because we do believe that the capital allocation, specifically in the petrochemical project, will have, I think, a material impact in terms of return ratios and in terms of balance sheet quality, as well as, overall profitability over a longer term. So that is a stock that, we think, we are a bit negative on. Gujarat Gas, but also at this price, we are a bit cautious on. We do believe that multiples are at a sufficient premium over IGL and MGL. And there are enough concerns and volatility around Morbi volumes, as well as a lower than expected ramp up from the newer areas to, warrant skepticism, specifically at these price points. So that's broadly how, we are looking at it at this point.
All right, Probal, thanks very much for that. Appreciate you joining in, and it's a pleasure having you with us here. Speak with you once you start to, once we start to get these results, etc., going.